Gold prices were modestly higher ahead of tomorrow's FOMC meeting. Recall we've seen a pretty wide range over the last month. Gold, which is trading about $75 range, hitting as high as $15.66 and as low as low 1490s. It's been one of those months where you would have thought there was a lot happening and a lot of unexpected results going through the market. All along this month, we knew the Fed was going to be cutting rates. There has been some extra position squeezing. We saw longs getting in, possibly over their skis, and then getting out very quickly off the highs. Likewise, some of the economic data was a little bit better, and maybe the market started to discount some further rate hikes down the road. The September rate cut has been priced into the market the entire time, and likely we will see that tomorrow. At this point, the dollar has been a real enigma. The dollar strength has joined the gold strength, and even when gold pulled back, we saw the dollar pull back as well. But in recent days, we've seen a dollar funding squeeze, which has really thrown a wrench into not only what's happening in the market, but the dollar has remained strong ahead of an expected rate cut as the gold kind of starts to get its sea legs back under it. So again, all the levers and pulleys here are kind of pulling in different directions. I think we'll get a little bit of clarity after tomorrow, but I think in most cases, there is a lot of confusion in the market. That would entail gold to go higher. When all things are unknown, typically gold is a better place to rest your money than is other higher risk assets, and the dollar will do what the dollar will do. But I think at this point going forward, it's up to the Fed to give us some clarity, and it's not going to be what happens in the next 24 hours that's important. It's what's the Fed's macro message moving forward. Things like insurance cut, mid-cycle adjustment, those types of terms will likely be very gold negative, given the fact that if this is a one and done type of rate cut, I don't expect it to be, but that's really, I think, what the longs are waiting on is how much further can the Fed be more dovish or more aggressive moving forward, and looking out to maybe a December rate cut, maybe some QE, something like that would really not only in the macro sense pull the dollar back, but really bid gold strong. Gold would be very undervalued if that was the case. I think the Fed wants to be very careful because of the recent rate hikes we saw up until this year. They don't want to act as if maybe they overstepped their bounds. So right now, gold is in a holding pattern, but starting to build a little bit more of a bullish base than we recently saw last week. Tomorrow's rate cut and Fed announcement and Fed statement and forward guidance is all going to set the table for what happens heading into the end of the year. And gold prices right now will be very, very clear as if the Fed wants to cut more, if they want to be more aggressive in easing, you will see gold prices shoot higher. If they leave that out or if they omit that from their press conference and their statement, you will likely see gold prices hover sideways to slightly lower. And if they say this is it, I think gold prices have a lot of downside risk here. So right now, gold bullish heading into the FOMC, but a lot's going to change in the next 24 hours.